Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. The US dollar, the most powerful currency on planet Earth, at least for now, because there are some that feel that the dominance of the US dollar, the reign of the US dollar, is going to fall off in short order. And that's because countries like Brazil, India, Russia, China, South Africa, if you want to throw them in there, also known as the BRIC nations, are going to get together and get rid of the US dollar. And once that happens, the world stage is absolutely going to change. We need to explain why that is a little bit overblown and why the world is even using the US dollar to begin with, and help you to understand a little bit about world history and international economics. So let's go ahead and break it down. For the last 80 years or so, the US has been, again, the world's reserve currency. Basically, that means that it is a default currency. Whether you are in China, if you are in, pick a country, Wakanda, just to throw it out there, if you're in Wakanda or wherever, and you're doing international business, you're doing international trades, it is usually done in US dollars. In fact, I think it's about 60 to 70% of the entire world's currency is denominated in US dollars. So a lot of these transactions, whether you're doing business with the United States or not, you be Canada and Mexico, you're likely going to use US dollars because it's easy, it's simple, and it is safe. That is the reason why I don't think that any new currency that pops up, including Bitcoin as well, is going to come and really usurp the US dollar, at least in our lifetimes. And there are a few reasons as to why. Number one is geography. Yeah, geography actually plays a part of this entire story. That's because if you look at a map or a globe, you look at the United States, and who are its two neighbors? Canada and Mexico. That's it. That's it. And the three of us, for the most part, get together fine. We haven't had any major conflicts, haven't had any wars between those two countries, and everything has been copacetic. That's it. Why is that important? That is because you need stability. You don't need a whole lot of war, especially in your homeland, if you are a country that's trying to look to attract foreign investment, if you're trying to have everybody use your currency. For example, if you are in Europe, in the Eurozone, you're still dealing with Russia and Ukraine. That's not the only time that Russia has done something crazy. So that puts a little pressure on you, and it makes things a little bit less stable. If you are in Venezuela, there's some things going on there. There were some things going on in Brazil not too long ago. Everybody who has, a dozen neighbors, and there can be a little bit of conflict, that's something that you do have to be concerned about, and it's something you don't have to consider yourself with if you're someone like the United States. Really think about it. When's the last time there's been a conflict on U.S. soil? That's a history question for you. I don't know. Outside of the Civil War in 1865, I really can't throw out another one, especially, I guess, the July 4th, right, 1776. You can throw that out there, the U.S. Revolution. But it is extremely rare. You're talking about once every 100 years or so, and that's really it. However, overseas, this tends to happen a whole lot more often, and that's not a place that you want to invest, because remember, when you are talking about U.S. bonds, right, that's basically when we loan our government money, and other people, other countries, will loan our government money as well. They want to put their money in a place that is safe. They want to put their money in a place that does not have as much conflict. You can't really find too many other countries that has been like that. But the second thing is independence. Not independence in terms of the political sense of the word per se, but independence in terms of its central bank. Our central bank, the U.S. Federal Reserve, makes its own decisions based on its own policies. It is not beholden to whatever Congress wants them to do. The only political part of this is, yes, the President of the United States does appoint the Fed chair, but that's it. The President cannot say, I need you to raise interest rates, I need you to print more money, I need you to do this or that. Does not work like that here in the US. It does work like that in other countries, which is a concern, because you are beholden to however that leader feels at that point in time. It can be deceiving as well. If you are an investor, you're not really sure how someone feels about a certain policy, you might not want to invest there, and that's something that can be a little bit concerning. Those are the two primary reasons, but also go back and look at how strong the US dollar has been over the last 10 years. surprisingly, it's actually gotten, surprising to some rather, it's actually gotten a lot stronger. And you can also see this in times of crisis and conflict. If you go back and look at when Russia and Ukraine first got into conflict, the strength of the US dollar rose because there was uncertainty. People flocked to safety, so they flocked to the US dollar. If you go back to the pandemic, another time where people flocked to the US dollar because of its history of stability and its independence, and again, that geography piece as well. Will the US dollar be dominant for the next 200 years? I'm not going to sit here and predict the next 200 years, y'all. That's not something I'm in the business of doing. However, it is safe to say that within my lifetime, it's probably going to remain the same. Now, another thing you can throw out there is, well, what about Bitcoin? Couldn't that usurp the US dollar? Couldn't that be a thing that people just kind of go ahead and default to? That is possible. It is a possibility. I don't think it is something that's likely, because right now, based on what we know right now, you don't want to put your country's reserve, and you can ask El Salvador this, especially last year, you don't really want to put your country's reserve in something that can fluctuate wildly. Imagine you putting money in the bank and you think it's going to stay stable, and you turn around and it loses 50% one year and it's up 70% the next. That's very difficult to do. Also, if you're trading in Bitcoin and you're trading, I'm looking around the room, I don't know, lumber for oil, and the prices are fluctuating 24/7 that wildly, that is very difficult to do, to shake out that math and make sure that you're getting your value's worth of whatever it is that you're looking for. So again, until that starts to stabilize, which I don't know if it ever will, it's going to be very difficult to switch to a completely decentralized virtual currency. Also, in real life, you're going to want, or countries, right, who are going to legalize this and make this their official currency or not, they're going to want some level of control over it. And Bitcoin is decentralized. There's nobody running it. I don't think major powers, whether it's US, China, Brazil, India, Russia, the UK, whomever, I don't think they're just going to let that fly without having some control, because if we're all using Bitcoin, the US can't sanction somebody from not using Bitcoin. They're going to want that control, right? For security reasons, for good reasons or bad reasons, they're going to want some control over it, which they don't have. So I don't really see Bitcoin doing that. But in either case, right now there are no real legitimate reasons to be afraid of the U.S. kind of losing its dominance. Even the Chinese yuan only represents 2% of the currency trades. I know there are some headlines around how they are doing some things with Russia, but again, they can do that. That's not really a threat at this point in time. So just got to get out there and explain it just a little bit, because I know some of these headlines can be scary. There can be a lot of YouTube videos and holes that you can fall into. People who don't have economics degrees and don't have master's degrees and don't understand how any of that stuff works, they just know what gets clicks. So I wanted to explain it in a way that makes sense. If you have any questions, feel free to let me know in the comments below. All right, that is it for me today. I'll talk to you later. Bye.